All right, let's talk about something that for most builders is, well, it's a chore. Bookkeeping. It feels like something you just have to muscle through for tax season. But what if I told you it's actually one of the most powerful tools you have for making your business more profitable? Today, we're going to completely flip the script on how you see your books. This probably sounds familiar, doesn't it? It's a super common feeling in the industry. You've got endless paperwork, the numbers can be confusing. It just feels like a burden, something the law requires, and that's it. But that's the exact mindset we're here to change. This right here, this is the whole game. We need to shift our thinking from that column on the left to the one on the right. So instead of seeing bookkeeping as just another cost, let's start seeing it as an investment in having control over your business. It's not just some legal burden, it's your competitive advantage. It's the system that lets you plan, strategize, and at the end of the day, build a much more profitable company. And here's a little perspective for you. People kept detailed business records way before the government ever required it for taxes. So why'd they do it? Simple. You can't effectively manage what you don't measure. Good records have always been about giving a business owner the insight they need to make smart decisions. All right, so let's get practical. Part one of the system is all about getting a crystal clear picture of every single dollar coming into your business. We're talking about sales and receivables. You know, a simple sales journal can do so much more than just log your income. Think of it like your business's command center. Yeah, it lets you compare how you're doing this month versus last month, and it helps you forecast your cash flow. But the real magic, it helps you discover which types of jobs are actually making you the most money. The answer might totally surprise you. Okay, so you've made the sale. Great. But that's only half the battle, isn't it? Collecting the cash is what actually keeps the lights on. Receivables, all that money you're owed, is such a critical piece of your cash flow. And honestly, it's where a lot of builders get their biggest bookkeeping headaches. So how do you get a handle on this? It's actually a pretty straightforward three-step approach. 1, you have to know exactly who owes you what at any given moment. 2, you gotta start looking for trends. Is that percentage of uncollected bills slowly creeping up? That's a huge red flag. And 3, you use that data to tighten up your collection process and plug the leaks before they turn into a flood. All right, we've got a grip on the money coming in. Now it's time to flip the coin and talk about controlling every dollar that goes out. This right here is where profitability is really made or lost. Let me just ask you this, point blank, and be honest with yourself. Do you know, down to the penny, the actual profit you make on every single job? Not a ballpark guess, but the real number. For a lot of contractors, the answer is no, and that's a massive blind spot. And the tool to fix this isn't some fancy, complicated software. It's your good old check register. We just have to learn to see it a little differently. It's not just a list of payments. It's your central command for analyzing your costs per job and for making sure you're actually sticking to your budgets. So let's break this down into 4 key areas you've got to control. First, your checks. You need a timely breakdown of where that money is going. Next, payroll. Every hour of labor has to be assigned to a specific job. That's the only way to find your true labor costs. Then there's equipment. You have to know the real hourly cost of running your gear so your bids are actually profitable. And finally, you have to get a handle on your overhead. This is such a critical point. It's so easy to think of overhead, rent, utilities, as just fixed costs, stuff you can't control. But the simple act of creating a budget for them makes you so much more conscious of that spending. And the data shows that builders who budget their overhead always spend less than those who don't. That's basically free money dropping straight to your bottom line. So you're tracking money in, you're controlling money out. What's the big payoff here? Well, it's the ability to step back and see the entire financial health of your business. And that lets you make those big picture, strategic decisions that really move the needle. The engine that makes this all work is a concept called double entry bookkeeping. Now look, don't let the jargon scare you off. All it means is that for every transaction, you make 2 entries. It's like a scale. If cash comes in from a customer, your cash goes up on one side and your sales goes up on the other. It keeps everything perfectly in balance and makes sure nothing gets missed. It's that simple. And that whole balancing act is built on this one simple fundamental idea. Assets equals liabilities plus net worth. In plain English, that just means everything your business owns has to be balanced out by either what it owes to other people or what it's actually worth to you, the owner. Every report we're about to look at is built on this powerful idea.
So when you do all this tracking the right way, your system will generate 3 essential reports. You can think of these as the official report card for your business. Each one answers a critical question that you absolutely positively need to know the answer to.
So what questions do they answer? First up, the balance sheet. It's a snapshot in time. It answers the question, where do we stand financially, right now, today? Then you have the income statement. This shows your profit or loss over time, and it answers, do we actually make money last month or last quarter? And finally, the statement of cash flows, which for a builder is arguably the most important one. It answers the simple question, where did all my cash go?
And once you have these reports, you can unlock even deeper insights using something called financial ratios. Now, instead of just looking at raw dollar amounts, ratios show you the relationships between the numbers. For example, your profit margin ratio. It tells you how many cents of profit you're making on every single dollar of sales. Tracking a number like that over time tells you the real story of your business's health.
And let me be really clear about something. The whole point of all this is not to turn you into an accountant. You hire professionals for a reason, right? The goal is to empower you to understand the reports you're already paying for so you can ask smarter questions, spot problems, and use that information to make better, more profitable decisions for your business.
So I'll leave you with this one question to think about. After everything we've talked about today, take a really honest look at your own business. Right now, are your books just a tool for compliance, something you do to keep the government happy? Or are they a tool for control, your single best instrument for building a stronger, healthier, more profitable company? The choice really is yours.